Anthony DePaul, CEO of the Australian Stock Report, is joining us from our Sydney CBD studio. Anthony, good morning to you. Perhaps talk to us about sentiment as we head into this week. What are you sort of gauging it to be? Because those SPI futures are very buoyant, to say the least.
Well, the sentiment was mainly based on the non-farm payrolls that came out on Friday evening. We saw a huge rebound from the 3rd of June read, with non-farm payrolls coming in at over 280,000 for June. But what that did is it does show a bit of a strength in the US economy, but it failed to actually make the US dollar stronger. So for our market, that's going to be quite supportive of our commodities. And iron ore, also the frothiness we're seeing in gold as of late, the strength of the weakness in the US dollar will be quite supportive of that part of our market. In addition to that, when we talk about sentiment, the banks have been sold off on numerous occasions to key levels of support, and at these prices they need all the help they can get. So that positive offshore lead that we get from the US overnight will help them bounce off those key levels of support.
Okay, so you're watching the resources with much interest today, including gold, also the banks. There's not a lot of corporate data on the horizon today. We do have an AGM by Warrnambool Cheese and Butter being held. Where else do you look for sort of strength and or weakness in this market? Because if we're seeing buying in some areas, we're likely seeing selling in others. Where do you think that selling might occur today?
Well, I think we're going to get broad-based gains in our market today, but we're only a couple of % off key levels of resistance, around that 5,350 to 5,400 point level, and that's going to be the key level. You're going to have a fight between the bulls and the bears. Who's going to win? Well, time will tell. What I'm concerned about at the moment is we see very bullish price action in the US with the S&P 500 closing in close to all-time highs, but that bullishness is not shared in the treasuries. We've got US treasury yields continuing to decline, and to me that says that the sentiment is not aligned. And the global risks, we've got the Brexit, we've got the Italian bank issues, that's still creating a bit of defensive sentiment in the market, which is causing treasury yields to continue to decline and causing continued support in the gold sector. So to address that, we've got the Bank of England coming out this week, the first meeting since the Brexit. The Bank of England really needs to step in and ease the market concerns. We've got these issues around property funds freezing redemptions, with 5 property funds now with that status. We've got the IMF downgrading the UK economic forecasts. We've got loans from overseas banks to the UK market being put on hold. We've got talks around retailers putting their store rollouts on hold. We've got multinational companies looking to relocate away from the UK. They really need to step in and cut that cash rate.
Apologies. So in this environment, are you a bull or a bear? As we head into reporting season here in Australia, just quickly, what are you buying?
I'd be looking to, this is really a trading environment. You get in and you get out very quickly, so you don't give those profits back to the market. For today, or at these prices, I'd be buying the banks at key levels of support, and if we see a couple of days rally, selling early rather than giving those profits back. I'd be looking to have a hedge against a global liquidity event, so have a little bit of exposure to gold just in case the market falls off a cliff. And whilst utilities have done very well as of late, I would be looking to hold a little bit of exposure in that part of the market for a certain element of defensiveness, as well as keeping companies like Telstra in the portfolio despite their recent strength.
Hey, great stuff. Anthony DePaul, appreciate your time this morning. Have a great week. Anthony is the CEO of the Australian Stock Report.